Hello, I'm Troy Bockelmann with the CattleFax Close and Bell. Today's Close and Bell is sponsored by IMI Global, third-party verification programs that are an important part of your risk management toolkit. You're doing everything you can to select the best genetics, feeds, and health programs, so why not maximize those efforts by opening the door to expanded market opportunities? Visit imiglobal.com today to get started. The 90% lean beef market is an important consideration in today's domestic market. 50% lean trim from today's fed cattle are mixed with 90s to make blended burger with a higher lean target to add value to the market. Australia is the largest supplier of lean trim into the U.S., and what happens down under can impact domestic prices. The loss of protein due to African swine fever and the resulting hog liquidation in China has fueled record beef exports from Australia to China. Through August, Australian beef exports to China are up 70% or nearly 185 million pounds. U.S. imports from Australia are up 7% year to date, yet in the last 3 months, imports have slowed to year-ago levels. This demand draw has supported the Australian 90s price. The most recent Erner Berry quote for the Australia, New Zealand, East Coast spot 90s import price was $245 per hundredweight, up $61 from a year ago. This has supported U.S. prices as well. Currently, the domestic 90s market is nearly $30 above a year ago at $218 last week. Seasonally, the 90s price declines into the peak cow slaughter period in the fourth quarter. But with strong lean trim demand, as well as supported Australian prices, the 2019 90s low could still be $20 or more above a year ago. Cattle slaughter down under has been running 6% above a year ago so far in 2019, and has been able to support the increased exports from Australia. Yet Australia has been in a major drought for some time now and continues to liquidate the herd. With rain, the Meat and Livestock Australia forecasts that 2020 slaughter could significantly decrease as the industry starts to rebuild. The Chinese demand for Australian beef, as well as decreased slaughter, would support the market in 2020. Increased competition for Aussie product on decreased production would continue to support U.S. prices and as a result, decrease U.S. imports from Australia. With decreased U.S. lean trim supply, select product could be ground into trim and would be supportive to the U.S. cutout as well as cow values. While the magnitude of the support is still unknown, it is already clear that the ASF-driven protein shortage has started to influence prices and will continue to do so in 2020. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the volatility is extreme, the risks are big, but the opportunities for success are there. So how do you sort through it all to decide which way to go? For more than 50 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, our focus is you. We provide a direct line of contact with you, our client, to the CattleFax team with our daily updated website, modernized mobile app, or the traditional phone conversation. CattleFax, the deciding factor. Become a member at CattleFax.com.